How y'all doing? I'm doing fantastic. Hopefully y'all are doing well as well. Today we had a nice day. ICT kind of went over some anxiety stuff. I really ain't not gonna go over my notes too much anymore. They're just gonna be daily reviews, and I'm gonna start. I'm gonna be posting these every single day. I'm gonna have a daily review with my annotations. So first, let's just look at a chart with zero annotations. So this is the AM session. This is actually the 5 minute chart. So this is anything without anything on it. And now I'm gonna go in and we're gonna look at everything, my annotations, and what I saw in price today and what I thought was important. So in terms of news, we had no news today. We had Monday, no red folder news. Tuesday, no red folder news. Wednesday, CPI. Thursday, PPI. So Monday, kind of lackluster, and that's kind of the type of profile that we had today. Kind of lackluster. We're going from external range liquidity back into internal range liquidity, back into external range liquidity. What I want to talk about is just notice this on the 15-minute chart. There's not really any expansion legs lower. We're in a consolidation profile, so we're hunting liquidity. So we straight up go from this high down to this low, and then we hunt liquidity, we come back, we hunt liquidity. Like, there's not expansion lower. So we are in a consolidation profile. So with that being said, there's still opportunity, but you got to approach it differently, not looking for too much. And I have way too many handles. I need to kind of clear this before I start these videos, but I think that okay. So this is kind of just my journal log. So it gives you a kind of insight to what I do and how I annotate. So I pretty much, whenever I annotate, I just write my annotations. I go over everything. Sometimes I go into the 15-second chart. Today I didn't do that nitty gritty because we're in a consolidation profile. So those 15-second charts, although we are going to look at them, they're not going to be as important. So I kind of just want to bring out the most important details. So let's actually start in Asia. I've been paying attention to Asia a lot more, and Asia price action is honestly like really nice if you know how to trade it. I'm currently trying to figure out and collecting data on Asia. So here is Asia. This is my screenshot here. So let's look at this here. So here we have a new week opening gap. We instantly open up higher. From 6 to 7, we're not looking to trade it at all. We're just looking to see that initial doing range that we put in, and then 7 onward is when we're looking to trade. So as we see here, 6 p.m. to 7 p.m., we create smooth edges, we drop down, and now this is when we use the new week opening gap, constant encroachment, perfectly. Look at the bodies, sell side taken, and then boom, immediate expansion here. If I'm being honest here, maybe this volume imbalance down here is the only entry, but I see this a lot happen. Asia around 7 will have quick expansion, and we won't really offer much sort of entry. Let's see if I have another example. I believe the 5th was a good example here. Yes, this is what I'm talking about. So see how in Asia when we start at this is 7 in that 7 a.m. hour. There's not really much entry. We're kind of just expanding to fair value, which is going to be that new week opening gap or new day opening gap most of the time. But in this example, the fact that we are respecting that new week opening gap, we're going to hunt premium arrays here. And 15-minute order flow is key. Intraday, no matter what time frame, 15-minute order flow. I've really been focusing a lot on the 15-minute chart and looking at 15-minute order flow because price isn't just going to randomly reverse on 15-minute order flow, and that's just going to be the main time frame. Price is really keying off for intraday movements, and that's how I see it. So here, sell side taken, immediate expansion. We take smooth edges. This BISI, we're accumulating within. Sell stops, accumulation. So we just have this massive expansion. So on the 15-minute chart, this looks like a big bull-face candle. In Asia, since volatility isn't at that high, we're likely not going to seek buy side then immediately like reverse. Like, Asia is not that type of session. So here we accumulate smart money, accumulates these sell stops. We displace higher, volume balance gets respected. It's constant encroachment of this wick. We're respecting this imbalance here, and we're not trading into this imbalance. So we're leaving a breakaway gap right there. So that was very nice to see. Very, very nice price action during Asia. And if we just look at this is a little bit after Asia, kind of going into Asia close, we have that same chart here. Imbalance, down close candle, boom. Sell stops, boom. Like, institutional order flow is bullish. So if we're looking at these orange levels, they're daily volume imbalances on my chart. So if you go to the daily toggle settlement prices, you'll see them. And this is where ICT actually took a trade here. He took a trade on the 2-minute chart. And here we have this imbalance. We had a sell stop right here. Displacement, breaker with this imbalance here. Volume imbalance, or breaker with this imbalance and volume imbalance. Trades that. And boom. Trading. And he's targeting the end of this volume imbalance right there. We go into London. London honestly wasn't very eventful at all today. Just following order flow. Order flow, order flow, order flow. And what does that mean? Down close candles and imbalances. How are we respecting that? Down close candles, boom, supported. Down close candles, boom, supported. And here, we're dropping down lower. Taking these lows here. We're leaving smooth edges. And then boom, we're trading those smooth edges. And this is nice to see the volume imbalance actually be respected as an array. You look at this body right here. That's right at that constant encroachment of that array. And look at where we stop here. And we trade lower. So that was very nice to see that. And here we have a New York AM session. And here, I kind of just want to go in the charts to go over this. So here, if we look at that 15-minute chart, that's going to be the bellwether chart. Notice how we actually get a reversal here. But where's 9:30 open? 9:30 opens here. We're expanding higher already. We're likely going to continue in that direction. We have an immediate rebalance. We're trading up into a premium array, a 5-minute BISI or SIBI that I'll show on the chart. And then here we have a reversal at a key time of the day. At that 9:50 macro, we end up having a reversal. We trade lower here. And there's like a really great PD array that we're reversing off of. We're reversing off of a 4-hour BISI. So it isn't anything crazy, but then we trade back to external range liquidity, back into internal range liquidity, and the market on close trades higher. What I do want to point out as well, if we look at the charts here, we have a new week opening gap, and today's Monday, and this new week opening gap has no sell side delivered to it at all. So that will likely get delivered to at some point the rest of this week. So my bias for the rest of the week is looking to see if we fill this portion of this at all. And I'm guessing that we likely will, but that's what will be on my mind going into the upcoming days. So here, we trade lower, and this is a devil's mark. So this is when we have a wick or multiple wicks with no body at all. That'll be a good target. And notice how this happens at 8:30. So this, the fact that we have no wick on that candle, it's gonna be a good. These are like smooth edges. Anytime I see this, that's like a smooth edge. I believe Monster Lab is the one that came up with that. So there we have smooth edges. We're trading higher into a premium array. Here, everyone trying to short it off of open is getting just slaughtered out of the market, out of the market, out of the market. We're trading up into a key PD array at a certain time. We have that 5-minute SIBI right here. We're trading to that at a key time of day. We end up having a reversal. We're trading lower, back down. We're taking sell stops, referring to this volume imbalance here. Constantly approaching that opening range gap is also traded to. And like, I don't really like to see a very nice array that we trade off of, but in this case, it isn't the cleanest. So got to keep that in mind. We also, as 11:10, that 10:50 macros ending there, and then we're trading higher off of that. Lunch hour starting, we're keying up in that lunch hour, then we're trading up to AM session buy stops, and we're actually taking external range liquidity. SMT forms, SMT above true day. Oh yeah, notice how we are dropping right below true day right here. True day open, boom, right below that. Beautiful. And we're trading up higher, SMT, and we'll get into it. I think I might do slideshows again just because it's just very nice and clean. Like here, I have a lot of annotations, so these are my annotations and what I see in price. So right here, yeah, this kind of is a lot. Hold up. Okay. Yeah, let's look on the 5-minute first. So let's go on RTH, regular trading hours. Here we're opening up with a gap premium. So we know that constant encroachment is likely to get traded to within the first 30 minutes. But this is a case where we don't. We keep on pressing higher, keep on pressing higher. Monday, we're pressing up into premium arrays, and it gives me a lot of like, I don't need to be trading these right here. Trying to go short, trying to go short. Like, although we're in premium, I'm not gonna try to buy this. We're gonna need to see, and the market's gonna need to show us that we want to reverse. So here, this is a new week. Hey, I'm like all over the place. This is the new week opening gap that we're trading into, that we're respecting. Notice what is happening here. Right at 8:30, 8:30 we get a reversal. That's key. These three down close candles, order blocks. These are the changes to delivery. Boom, propulsion block right here as well. Trading into that. This changes to delivery is confirmed right here. Boom, propulsion. We trade into that. Also, notice what the bodies are respecting here. We have a volume imbalance right there. Volume balances are key. Volume balances kind of are my favorite PD array because when we respect them, that's very telling of if we are in a buy model or a sell model. Notice here, what are we coming back down? We're coming back down to a volume balance. Notice how we're respecting that. Okay, that doesn't mean that we have to enter here. Like, we don't need to get on this all of this down here. It's just insight that we're given. And notice here, before 9:30, what do? We create a fair value gap. What do we do at 9:30? We trade right down into that fair value gap. So the fact that we're priming up a fair value gap is priming a 9:30 expansion higher. Notice how we're also within a buy model. We have buy side liquidity that rests here. We have a premium array that rests here. I'm gonna get rid of that. I don't need that on the chart. Then we have this premium array that we trade into here. So I want to show up another example of this. It was on, I think, the 4th. No, it might have been at the end of August. Yeah, but this is like the exact profile that we had. 9:30 expansion. This is something to note, something to log. Yes, right here. 29th of August. Look at this profile. It basically forms right before 9:30. This is priming us to trade higher, to expand higher. This is when we'll have our 9:30 expansion. This is when it makes sense to. 9:30 expansion because we have a gap that we're trading into at 9:30. 9:30 produces an order block. We have a first presentation on the 15-second chart that we'll drop down into that we're respecting, as well as this order block that we now have here after the change of state delivery right there. Boom. We are not trading lower. Like this is not going to be a full on. We're still within a buy model, and that's important to note that it's going to take time for us to now trade into that sell model. So here we're still in a buy model. This is accumulation. Boom, we trade down into this low. 5-minute BISI's getting respected. We have another 5-minute BISI here. We have constant encroachment this wick here, as well as this BISI right here. We're trading that down into a 5-minute order block as well. We're trading, and then we're having one punch higher here. So we have a nice energetic move right into the top of that SIBI right there. And this is then when we have this big move here, expansion higher, and then we have a reversal here, a true reversal. We now have a balanced price range because we have both buy side and sell side offered. We trade below that, and like we don't need, like, this is where I'm trying to get my mindset better at. It's like all I need is a little sliver of this move. Like I just wait for confirmation, wait for what feels comfortable. I don't need to be in here top tick in this move or top, like, although I know that we are in a premium pricing, doesn't mean I need to be in that. And here we create a balanced price range. We trade lower, breaker. Notice how we're not allowing to trade back up into this. We're leaving this as a breakaway. That's kind of what we want to see. So we want to see that. And then we trade right into that daily volume imbalance. And we're trading lower. Notice all this delivery. All this delivery is very balanced. We're not leaving any gap. So we don't really need to retrade back up to then have expansion lower. So this move is going to be pretty fast here. And we're trading down lower to this devil's mark here. Expansion, institutional overflow entry drill. Right there. These wicks. And then look at this. I believe this is a redelivered rebalance PD rate. I don't really use this that much. I'm pretty sure. I'm pretty sure that's a redelivered rebalance. Notice constant encroachment of that wick we're respecting. 1, 2, 3 drive into buy side right there. Boom, displacing lower. Imbalance right there that we're trading into. Another leg lower. What is this now? Oh, 1, 2, 3 drive. We're now in discount. We're below true day open. Smart money is now distributing the majority of their positions, and now they're accumulating long positions. Here we're trading the sell side. We don't know yet for sure where we're going. We know that we're getting closer to the lunch hour, so we could have a retracement back up into AM buy stops. Where's that rest? AM buy stops, I would say rest here. And there's not really any significant highs, so that's why we trade up into this high during the lunch hour. 11:30 starts that. We're keying off it a little bit early at 11:10. As soon as that 10:50 macro is over, 10:50 macro, we trade up higher. 1, 2, 3 drive, we trade lower. Boom. Expansion. What do we have here? This is a 5-minute breaker right here that we're trading back into. Also into this gap right here. We now have a balanced price range. We trade lower, we trade back higher. We don't need to trade any lower. The algorithm is going to seek higher prices. And this is what I want to point out here within this buy model of price. The fact that if we zoom out on the 5-minute, in this whole leg of price, IR is the immediate rebalance. Whenever I have that annotated, we don't have any inefficiencies. We don't have any sell side imbalances besides this one and this one. So these two are going to be important arrays for the market. As we see, boom, consequence of that perfectly. So let's drop back down into the 1 minute. As we see, we have that inversion right there on the 5-minute order block propulsion. Boom. Here, daily volume balance we're trading into, and then look at that inversion level at the 50% right there. Down close candles, supporting price. Boom. Inversion level, and then where are we trading up to? Buy side liquidity. So right now we're back up into a premium. We're trading above a high. So what are we? We're within a premium. Lunch hours starting to end here, and now we have an SMT that forms. SMT above true day open shows that smart money are able to accumulate short positions. That SMT is a cracking correlation. That is the smart money fingerprint right there. Here we have this. Boom. What is this? Shift to market structure right there. 2022 model. Trade lower. 2022 model. Trade back up. And this is beautiful. This is beautiful. This is just imbalance, rebalance. Imbalance, rebalance. Notice how we're trading back up there. Why don't we trade back up into here during this? Because we have an order block right here. Because this is a balanced price range. We don't even need to trade back up into it. But look, we have imbalance, rebalance right there. It's a lower time inefficiency. We're trading lower volume balance. Like, this is beautiful, beautiful, beautiful market delivery. Look at this. The daily volume balance is getting traded to right there. Sell side imbalance. Boom. SIBI on the 1 minute. And this, the fact that it's in a green portion, this is the silver bullet I'm denoting. So 2 p.m. starts. We then accumulate, manipulate, distribute. Accumulation, manipulation, distribution. This is a new week opening gap. And notice how we don't really have any new week opening gaps to refer to. There aren't really any new week opening gaps besides this one, which is on the 11th of August. So you have this. Boom, we're trading lower right into a 15-minute SIBI. Or BISI, my bad. 15-minute BISI. And then notice this. Immediately displacement higher off that BISI. Okay, so now I'm kind of waiting. I know that the market on closed macro starts at 315. So this is when we're gonna have a spool to liquidity. If I look at this, these highs are all relative equal. So this is the liquidity that we are gonna hunt during the market on closed macro. We also have this daily volume balance here that we could trade to. So that's also a target in mind as well. And that's just kind of what I was looking at and tape reading here. So here we're trading into this new week opening gap. We traded lower back down to this down close candle here, and this is beautiful delivery. If you go to the 15-minute chart, this is cost encroachment of that wick. Perfect delivery right there. And boom, what are we trading lower to? On the 15-second chart, I want to look at this. We're trading lower into a 15-second array after we take buy stops. So buy stops are induced here. Then we trade lower Sell stops are now induced. We're now trading into a PD array. We're retrading that BISI on the 15-minute chart and to that array on the lower time frame. So what is this? Breakout traders enticed. Breakout traders enticed. Now we're having the real move. What is this? A breaker. Whew. Like, can we get any better than this? Get any better? This is when support and resistance works, when we have imbalances within that. Boom, that gets traded to perfectly. We also have what here? We have another discount array here. Constantly encroaching that wick is getting respected. Beautiful. Then now here, we're accumulating here. Boom, buy stops taken. Another signature. Buy stops taken. Sell stops taken. We have equal lows here. A significant price run is not going to happen until we take, unless there's a stop hunt here. Breakaway gap on the 1 minute. We now have an order block. We're trading higher. And here we have this imbalance here. And now we're trading up to buy stops right there. So very nice price action there. And now this is where we're trading at currently. So I do want to hop down into the lower time frame, such as the 15-second chart. Let's look at this delivery. Started from 9:30. So let's look at this at 9:30. So 9:30, what are we trading into? We're trading into that BISI. Notice how we're still within a buy model. Order flow is key. Order flow is telling us that, hey, we're respecting these volume imbalances. We likely might want to reach a premium array before we trade lower. I feel like that's sometimes what I struggle with, and sometimes what I mess up on is knowing that the market's likely going to draw to a certain array, but rushing it when it's too early and it's not time yet. It's not time yet. We're still within a buy model. What are we waiting for? Macro. What are we waiting for? Displacement. We get none of that here. We get zero displacement to the downside, and we're not even within a macro. We're still trading up into that premium array. We don't know for sure yet, but we want to see displacement to kind of confirm that. And what kind of I think makes this worse is the fact that social media, like we want ourselves to look better than we actually are. We want to go on there and we're gonna say, hey, bro, look at all these trades I took. I just made this much money. Oh, this is how I made $1 million. Like this is why I'm starting to like kind of have like a counter like I just don't love the mindset that social media brings. You see these traders saying that they made $20,000. This is how I made $30,000. When let's be honest, like that's not gonna make you a better person, and nor is it probably gonna make them a better person because it's just feeding their ego. And this is what I think is just so toxic about this and about sharing progress, about telling other people that you're doing this, because it feeds this mindset that you want to look better than you actually are. You want your life to be as good as it can be. You don't want to look bad. You don't want to look weak. You want to be that guy. And social media creates and cultivates that mindset that you are better than you actually are. And that's just kind of what's been on my mind. And yeah, so here we have first presentation on the 15-second chart. Notice how it's not this candle because this is 9:30, 9:31. We now have first presentation. We trade higher. It's just accumulation. Buy stops, sell stops. Now we have a price leg. This is what I like to see, and I've noticed it when we accumulate, when we have a consolidation here. We take both buy stops and sell stops, and then we trade out of that. We're looking for displacement out of that. We're going to trade back into this imbalance here, and we're going to respect that. No, so respect that. Daily volume balance as well. Trading higher, boom. Trading lower, back down to this imbalance. I believe it's a 5-minute right there. So that's what we trade to. So we trade to that, and then boom, we're keying up. The high, this isn't anything. This is the buy side liquidity that I'm marking here. And what do we have here? 950 macro. 950 macro starts here. We're gonna start a price run here. So here we trade. We just immediately start displacing higher at the 950 macro. Trading there, boom. Notice buy stops, buy stops, buy stops. Everyone trying to go shorts already taken out of the market. It's too early for them. We're now trading up to the premium array. Oh, we're breaking out here. No, we're just trading into that 5-minute SIBI. Like, look at the bodies here. This is beautiful. Beautiful. We're trading higher. And now this is when we see displacement. I don't need to be in this. It's not necessary. But here, what do we have? Breaker. That's opportunity. Okay, say we miss that. What do we also have? Order block. Last two up close candles. Boom, traded into. Sell side imbalance right there. Boom, that gets traded into. What is this? What is this? Yeah, it's 2052 model. Let me trade lower. We have that. That's that new week opening gap that we're trading to. We're trading the low end of that volume balance. Boom. Trading lower. Sell side is taken. Devil's mark has been taken there. Sell side liquidity next. Boom. Trading to that SIBI. One leg lower to trade higher. Expansion. Buy stop taken again. Lower. Buy stop taken here. Trading to the sell stops. Balance price range forms. I don't have anything that I want to bring up here. Here's that lower time frame inefficiency. Boom. We're leaving a breakaway. It doesn't get traded to a 5-minute order block in sell side imbalance. It's holding there. Sell stops taken. Shift to market structure. Imbalance right here. Let's just look at this. Is this a premium by the... it isn't. Maybe from this. Yeah. Trade lower. Volume balance right there. And here is what I want to look at. Is this PM session run. This is what I've been backtesting. And I've noticed in my price run is if we go lower to fill a volume imbalance, we're likely going to have... If we fill, and notice how here we're taking sell stops as well. If we're filling this volume balance, that means that we want to go. Oh, we want to go. Because we're going to look to efficiently deliver the market here. And notice how we left this little glitch in the matrix. So if we want to go higher, sustainably, and longer than just to short-term buy stops, then trade lower, we actually want to be in a buy model here. We're going to trade it. We're going to fill this volume balance before then going higher. So that's the array that we key off here. Let me look at this. Look at look at the candle of that. The wick of that. It's just beautiful. It's beautiful. They're trading lower. Not really too much of entry here. We're just displacing. Displacement. We don't trade in that volume imbalance. And here we have accumulation. I was actually watching this live, and I like these equal lows a lot here. And this kind of was a nice little trade here. 350 market volatility injects. What do we have here? Balance price range forms. Little inversion and an imbalance right there. So balance price range forms there. Trade lower. Volume balance here. Up close candle. Mean threshold. Respecting that with the bodies. Then we're trading lower into that BISI right there. Into that breaker. Boom. Trade that perfectly. And yeah, that was the day today. That was the business. Here we have a 5-minute chart. Here we have so many annotations to keep track of. And yeah, I kind of just want to go over a little bit of bias going into tomorrow. So actually not really. I'm just looking at these levels, and the key level I'm looking at is this new week opening gap. This portion that has been filled. Tuesday, no red folder news. We do have... I don't know if I like a high here because we're not really immediately displacing. I think we could be keying up a premium for Tuesday or Wednesday to then trade lower throughout the rest of the week. But anyways, hope you all have a good rest of your day, and I will see you all tomorrow for another market review.